If you're a US-based investor and you haven't heard of MercadoLibre before, you can think of it as a combination of Amazon and PayPal that operates primarily in Brazil, Mexico, and Argentina. Actually, MercadoLibre is growing faster than Amazon or PayPal, and that delta is likely to persist. The shift to shopping online is happening faster in Latin America than in the United States. I've been following this stock for several years and I've had it rated as a buy almost the entire time. It was actually rated as one of my top stocks to buy last year. In this video, I'm going to revisit Mercado Libre stock once again and answer if I think the stock is still a buy after the price has soared.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Mercado Libre stock in 2024 has soared up to $2,100 per share, up from around $1,500 per share to start the year. Investors have appreciated the company's management continuing to generate significant growth. You can see in the company's key metrics in gross merchandise volume, items sold, and unique active buyers. In its latest quarter, the company increased its gross merchandise value significantly in all its major markets. Even against high comps, the company's gross merchandise value growth accelerated in Brazil to 36% year over year, which was the fastest pace of growth since the second quarter of 2021. Additionally, the company's number of items sold are also rising, increasing by 29% in the latest quarter across all its markets. And finally, its unique active buyers increased to 56.6 million in the latest update. That was up by more than 3 million from the previous quarter. And if you compare year over year, that was up by more than 9 million. So across all its key categories, the company is improving meaningfully. Items sold up 30%, unique active buyers up 20%, and total gross merchandise volume up 36%. Longer term, you can see how revenue has soared for Mercado Libre in the last decade, up to 17 billion in the most recent trailing 12-month period. And to make that even more impressive is its operating profit margin has turned around and started to improve. You can see here the company was on a downtrend all the way until 2020, and that's when it started to reach economies in scale and generate profitability improvements on the bottom line. And now it's up to 12.5% on the trailing 12-month period, up from negative 12% in the same time in 2020. Looking ahead, the analysts on Wall Street that are following Mercado Libre stock expect it will grow its earnings per share by 42% each and every year over the next 5 years. And that's down from the earnings per share growth improvement of 94% the company achieved in the previous 5 years. So management has demonstrated profitability improvements, and the analysts on Wall Street that are following this company expect its profit improvements will continue over the next 5 years. The return on invested capital also shows similar trends for Mercado Libre. After years of showing decreasing return on invested capital, the company finally reached economies in scale large enough to turn this around and start making progress. In the latest period, 19% return on invested capital. And given the trend improvement in profitability, I wouldn't be surprised if this return on invested capital continued improving over the next 5-year period. Underlying this growth for Mercado Libre is the massive tailwind, which makes it so much more convenient to shop online instead of in person. That advantage will never reverse. It will never be more convenient to shop in person than it is to shop online. It just, the physics of that will never reverse. And so this underlying trend will bring a tailwind industry wide, and Mercado Libre has already demonstrated its ability to compete effectively in its industry, in its geography. And so with that macro tailwind pushing it higher, and then the company specific factors having its performance improve, I think it's been a good combination for investors in this company. The balance sheet is okay. It has 718 million in net long-term debt. This is long-term debt minus cash. So it's not a heavily indebted company. And that's good, especially if you're a growth company. If you have too much debt, it can constrain growth because more of your revenue will need to go to pay interest expenses. And then when you see a growth opportunity, you'll be more able to capitalize on it because you have a balance sheet that can take on more debt if you see an opportunity that's worthwhile. And so the company does have a balance sheet that's in position to capitalize on growth opportunity. And finally, let's look at the valuation, which is not cheap anymore. It's not cheap anymore. Now, it's trading at a forward price to earnings of 44, which is more along the lines of being fairly valued. In the beginning of the year, at points in time last year, the company was trading at a relatively cheap valuation, especially when you see it trading at a forward price to earnings around 30. That's a very attractive valuation. I don't know if you're going to be able to find MercadoLibre stock at those valuations anymore. This is about where Amazon is trading at, forward price to earnings of 30. Amazon, of course, comes with less risk, but also it comes with a fraction of the growth of MercadoLibre. Amazon is growing at maybe 1/3 or 1/4 the rate of MercadoLibre's growth. So MercadoLibre is demonstrating better growth prospects than Amazon, but of course, you're getting more risk with MercadoLibre than you're getting with Amazon. Now, I highlighted that I've had MercadoLibre stock rated as a buy for a long time. I last updated that recommendation on June 5th, reiterating that I thought the stock was an excellent investment. Now, if you were to ask me today, do I think MercadoLibre stock is still a buy? I would say yes. I would say here today on September 23rd, MercadoLibre stock is still a buy, although I like it a little bit less today than I did maybe a month ago or 2 months ago because the valuation has increased substantially. Still, overall, the factors work in MercadoLibre's favor to make the stock an excellent long-term investment for investors looking for a company that has excellent growth, good competitive advantages, a strong macroeconomic tailwind behind it that's driving industry-wide growth, and selling at a reasonable valuation. It's not ridiculously expensive. In fact, it's not expensive, it's fairly valued. So you're getting an excellent business at a fair value with MercadoLibre stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.